Our long-held prediction that inflation will eventually give way to deflation remains unchanged. Put simply, there won't be any year-over-year price increases. Their current level is high, and it is just going up. People going on strike are shoppers. We still think monetary policy is tight now. And we predict that prices will crack. According to the blockchain analytics firm CryptoQuant, they have amassed 20,600 BTC, which is worth $1.38 billion. During the early days of spot Bitcoin ETFs, when BTC was approaching its previous all-time high, there was the greatest single day inflow for Bitcoin whales since February 8th. From $71,500 on June 7th to $69,000 on June 11th, the price of Bitcoin dropped significantly. After this dip, on June 11th, there was yet another major accumulation event, even though Bitcoin's price briefly spiked after positive U.S. Consumer Price Index data stopped its descent. The most recent data shows that Bitcoin is currently trading for over $67,500. In addition, on-chain intelligence from Santaman shows that the supply of Bitcoin on cryptocurrency exchanges hit a new low of 94,200 BTC, the lowest level since December 22, 2021. Investors expect Bitcoin prices to rise in the medium to long term, therefore a decline in reserves is usually a sign of improving market sentiment. On the other hand, analyst Ali Martinez cited emotion data to show that Ethereum whales had bought more than 240,000 ETH, which is almost $840 million at present pricing. Ethereum, in contrast to Bitcoin, has seen a growth in its supply on exchanges in the past few days. Exchanges presently hold around 17.98 million ETH, valued at $63.1 billion according to Santiment. These changes highlight the strategic accumulation tactics employed by big holders in the face of market volatility. As shown in their moves in the Bitcoin and Ethereum markets, it has dropped to 7% on a year-over-year basis now. To be more precise, we're growing at a rate that's less than half of that growth rate. When we look at it quarterly and then annualize it, you can see what's coming here from there. There has been a slowdown in the rate of velocity growth. It serves as no longer as a safeguard in the event of negative or weak money supply growth. Plus, it's really feeble right now. There isn't much space for GDP growth if the rate of money growth is 0.6% year over year and the 7% growth rate in velocity decreases to about 3.5%, which is the rate of increase from quarter to quarter. It accommodates both actual growth and price at somewhere between 3.5 and 4%. Which one is it? 1 and 3 or 2 and 2? What this means is that we have no idea. The past, however, is always in motion when it comes to speed. Negative aspects, we enter a recession as a result of its persistence. This means that we have been predicting a rolling recession for some time now. The real estate market has been experiencing a downturn. Vehicle sales are down, similar to a recession. Our expectations for a recession have expanded to include commercial, office, and multifamily properties. In our opinion, a consumption recession is about to hit. Unless we're in the 2008 to 2009 recession, consumption remains relatively stable throughout economic downturns. Here, though, it has been decreasing at a somewhat alarming rate. Additionally, we see a weakening towards a flattish consumption situation. That is why we anticipate price reductions. We really do. Additionally, and most crucially, NVIDIA has been the driving force behind the advent of the AI era, enabling startups like OpenAI, Anthropic, and Meta through its open-source Llama 3 platform. I think NVIDIA is in the forefront of this, and I applaud them, but we've been stating for a while now that if NVIDIA's present rate of appreciation, which is pretty extreme, is to continue. Those of you familiar with our work are aware that we originally planned a 100-fold move, but only managed to pull off a 3-fold move. When the market reaches a point of parabolic momentum, everyone gets on board. But if that's the case, the exponential growth here, then other businesses had better start seeing significant benefits as well. And we were hoping to catch a glimpse of them in the last quarters. To be honest, we haven't. Productivity may be on the up, but we'll have to wait for a few more earnings seasons to see for sure. The immediate first-order effect of generative AI is an uptick in production of goods and services that are superior in quality, delivered at a faster rate, and use less resources overall. Perhaps it is taking place, although at this point, it is unclear. In this way, we and many others use picks and shovels to organize. As far as anyone can tell, NVIDIA was the pioneer in this space. However, we must observe tangible benefits elsewhere if we are to continue with that change. Each of these equities then has its own set of buys and sells. Plus, we find generative AI to be very game-changing. We therefore find it problematic that so many other stocks have been pushed into the Mag 6 and Superb 6 indexes at the expense of these. There has never been anything like this level of crowding previously, according to certain metrics, which I believe I've already brought up. That included the Great Depression, when widespread fear of corporate bankruptcy was a real concern. A small number of stocks were occupied by them. This time we climbed higher.